Good evening, everyone. This is Kaynat Chainwala from Kotak Securities Commodities Research Team. Welcome to Options Wednesdays. And for today, the topic that we are going to discuss is economic indicators influencing market moves. Can we have the presentation, please? Okay. So, talking about economic indicators, what are we going to discuss about it today? We are going to go ahead and have a brief discussion about how economic indicators impact markets, what is their significance, what are the current trends of the economic data releases that is going on, what is its influence on the monetary policy decision taken by major global central banks, and then we'll see its historical impact. So we are talking about economic indicators, but what are economic indicators? So like any indicator, it actually signals or indicates or hint towards or large, basically gives direction. Okay, so when we are talking about economic indicators, it basically gives you direction about the state of the economy. It tells you about how the economic situation is, how the economy is kind of doing. Is it doing well? Are there signs of stress in the economy? And that is why these economic indicators are so important and have an impact on all the risky assets. So, to give a very basic definition of economic indicators, this could be any macroeconomic data or events used by market analysts to assess economic and financial state in order to make trading or investment decisions. Now, we have a lot of economic indicators. Not all economic indicators have the same impact. So we have, normally the economic indicators are divided into three types. It is high, medium, and low, depending on their impact on the, overall currency or commodity markets. Apart from the data, economic data, we have scheduled events such as monetary policy meeting. Today itself, we have the much awaited FOMC statement coming in. And we also have the summary of economic projections coming in tonight itself. So monetary policy meeting is one of these scheduled events which the markets look most forward to. uh, Talking about today, I would just like to give a brief uh, 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 um, um, about the FOMC meeting. Normally, all the central bank meetings, except for RBI, happens 8 times in a year. Okay, RBI has bi-monthly meetings, which means we have 6 meetings in a year, 6 statements, 6 policy decisions. In case of FOMC, we have, whenever like in those 8 meetings, we have 4 meetings wherein they give their economic projections, which are also known as summary of economic projections. Now, what are economic projections? Economic projections are basically nothing but the FOMC officials giving their view on, or giving their target range on inflation, GDP, employment, and most importantly, Fed funds rate. So this is why FOMC economic projections are very keenly awaited to get an idea of the monetary policy outlook from the FOMC officials themselves. But you have to be cautioned that these views can definitely change given the economic data releases after that. So they are subject to change, but yes, markets do definitely look forward to those projections. Next, we have meeting minutes, which usually comes after 15-20 days after the meeting happens. So it is basically a gist of what actually happened at the meeting, how many members supported the view of hawkish rates, dovish rates. So basically just a description of a summary of the meeting. Then we have speeches that are scheduled. We usually on Forex Factory, if you see, you will see a lot of speeches like scheduled at like FOMC officials or Bank of England or ECB president. So we have those scheduled events as well that have an impact on the economy, on the specifically on the currency, and of course, if it impacts dollars, it impacts every other asset. Then there are certain events which are unscheduled, which we do not really know ahead of time, which is like the bond or dollar buying or selling. Okay, so this could be done in order to defend the currency, like we are seeing in case of Chinese currency, yuan. They have been fixing their currency aggressively at higher levels against the dollar, because because of the property market concerns and uneven recovery, the currency has been literally slipping down to lower levels, which is why they have to aggressively fix the currency. So events like those, we cannot be, we don't know about. So such events also have a very high impact on the overall markets. Then we have government bond yields. Normally, bonds are considered as safe haven. So whenever there is a turmoil in the markets, we'll see that the bond yields are rising. So even if you know that gold is also called as a safe haven. So whenever there is a macroeconomic concern, whenever there is negativity in the markets, that's when we see the bond yields rising. Right now, also as we speak, bond yields are literally at almost like 16, 17-year high levels because of concerns regarding US economic rates. And since we are just ahead, just before the FOMC decision tonight, that is why we are seeing such a movement in government bond yields in the US. Now, talking about the most significant economic data releases. See, it's very difficult to track each and every data that comes in because there are literally hundreds of releases, economic data releases that come in. But of course, we have to see which data actually makes an impact and then start tracking them in order to, in order to kind of uh, help our own trading decisions or investment decisions for that matter. So the most important piece of data is GDP, gross domestic product. We all know that basically it is the value of final goods and services produced by a country in a given period of time. It could be for a quarter, it could be for a year. Okay, and as per IMF, GDP is defined as the monetary value of final goods and services, those that are bought by the final user, produced in a country in a given period of time. So we all know about GDP. GDP basically is the produce of a country in a given period of time, and it is the one of the most important data releases. So of course we need to track that to assess the health of an economy. Then next we have inflation. Now there are several measures of inflation across the world. Most widely used is CPI, which is consumer price inflation. Then we have PPI, which is producer price inflation. And then there's this one core PCE, which is specific to the US economy. Now CPI, we all know it's retail inflation. It is, as the name suggests, it is inflation which driven by consumers. Whereas the second type of inflation, which is the producer price inflation, it is actually only takes into account the inflation that the producers face both on the buying side and the selling side. So it does not really include any imports. Whereas CPI, it also includes imports. So this is the key difference between CPI and PPI. Then we have core PCE. For we will discuss that in more details in the later slides. But this measure, it is a specific measure to the US, and it is very important for the Federal Reserve. It is in fact considered as the Fed's most preferred inflation gauge. So they prefer core PCE more than the CPI when taking policy decisions. Next, we have labor market indicators. Now, the most common labor market indicator that is used across is unemployment rate. Okay, the other two, that is payrolls and the jobless claims, is again data that's more specific to the US economy. We are going to discuss that later as well. Then we have PMI, okay, Purchasing Managers Index. Both manufacturing and services PMI. We have two types of PMI. What both of these actually suggest or show is the business activity in an economy. So it is very important to see whether the manufacturing or services is expanding or contracting. So it gives you an overall idea about the business activity of any given economy. So now let's just discuss the data that we have just mentioned in brief in some details. So as you can see here, we have GDP sector-wise contribution, and we've taken 6 major economies. Okay, as you can see in all the economies, you'll see that services forms a very dominant part of the share of the GDP share. So of course, services PMI is a very important indicator to track, and mostly all the economies are driven by services. Next we have industry. So it includes manufacturing, factory, So overall, if there is a problem with the industrial activity, if there's a problem with the manufacturing PMI, this may impact the overall economy. Uh, but it will specifically probably have an impact more on commodity side. If you see, it will have more impact on the base metal side, because industrial sector is the demand driver for metals. So this will be the sector that a metal trader would be more interested into, like how is it performing. So as you can see, it's more mostly it's like 20% or more contribution in all the major economies. Next, we have agriculture and others. As you can see here clearly, agriculture accounts for a very small share of most developed economies. In India, we have, we are an agri-based economy kind of, so we have like a 20% share, whereas the other economies have share anywhere between 1 to 7%. In Japan, you can see it's just 1%, whereas in US it is like around 5% share. So overall, from here you can see that services dominate the GDP contribution. Now, taking a look at the recent trends in GDP, as you can see here in the graph itself, it's very clear that in 2020, all the economies saw a contraction, a negative GDP growth. Of course, because of the COVID, all the activities were stopped, manufacturing, services, everything was stalled. So, of course, we could not expect a positive GDP growth rate in 2020. But still, China managed to, maintain an annual GDP rate of almost like more than 2% in 2020, thanks to the 6.7% growth rate it had in the last quarter. So that 6.7% growth rate in the rebound that happened in the December quarter helped it post a positive GDP number for 2020. Then in 2021, we saw a sharp rebound across all the economies. Of course, countries were like kind of coming out from the COVID crisis, and so of course there was kind of a sharp rebound that we saw in 2021. But again, if you see the trend in 2022, we have seen that again the GDP has kind of dropped in 2022, and there are several reasons for that, because we saw that there were renewed COVID tensions. We saw that, in fact, if you see in 2022, even overall, China managed to grow just 3%. Okay, and it could be attributed largely to the real estate crisis that happened in China, and it had like an overall impact on the global economy as well, because China is a very big economy in terms of in terms of raw materials. Also, they are very big in terms of producers. Also, they are very big. They are kind of major demand drivers for most commodities. So, negative news from China and the fears that this real estate crisis could actually blow into something really big, and have an impact on the economy, considering that real estate forms a very significant share of the GDP in China. So that actually had a very negative impact. We had Russia Ukraine invasion then, that also kind of affected the economy last year. So we saw the growth rates kind of coming down last year after a sharp rebound in 2021. Now in 2023, what we are seeing is, we are expecting even lesser growth rates. If you see, except for China, we are expecting like a slower pace of growth in most of the economies in 2023. The reason for that is very simple. The most important reason is tighter interest rates across the globe. Literally rates have risen from 0 to 5.25 to 5.5% in the US. Similarly, we have seen rates in the UK going from like 0 to directly 4.5%. Similar case in Eurozone also. So overall, we have seen interest rates rising sharply in a very short period of time, which has definitely, kind of affected the economic activity and is weighing on the economic activity. And that is why we are seeing that we are expecting kind of a slowdown, in all the major global economies because of higher interest rates, uncertainty regarding China's recovery, and overall uncertainty regarding the global economic outlook, because how much time will it take to heal from the COVID related crisis. And again, now we are seeing that there are renewed concerns of real estate crisis in China. Again, that is also another major factor that could weigh on the global markets in the coming months, and of course have an impact on GDP as well. Moving on to the next slide. Now, since we've discussed GDP, now let's move on to the next part. Like I said, there are certain factors which influence policy decisions. Okay, so one is GDP, we've already discussed. Next, normally, the central banks, whenever they make policy decisions, these two, inflation and employment, are amongst the most critical gauges that the central banks measure in order to see the state of the economy, to see the health of the economy, and in turn take decisions accordingly. So in inflation, as I said, we have CPI, PPI, and core PCE. And in employment, we mainly, it's jobless rate that we focus on in major global economies. And in the US, we mostly focus on the non-farm payrolls. Now, talking about inflation in a bit of details, we all know that inflation, it plays a major role in shaping the policy decisions. Okay, because the higher the inflation, the government will be more, restrictive, or will be more, you can say, biased towards the hawkish side. While if the inflation is lower, the central bank would be more, would be prompted to take measures that are, easing measures basically, or providing stimulus to, push spending so that the CPI comes to the target levels. But as you can see here in the table on the left hand side, that, after a very high inflation rates in 2022. Now the recent figures, these are the most latest figures that we have seen in August 2023. Uh, the figures are definitely way lower compared to, last year, but it still is, pretty much higher compared to their targets. Like in case of US, you can see in 2022 June, it had in fact reached to 9.6% or 9.8%, and now it is standing at 3.7%, which is, a significant drop. But it still is well above the target of FOMC, the Federal Reserve, which is 2%. So that is why market, are concerned that, Fed would probably, hold on to the higher rates for longer, okay, because of stubborn inflation pressures. Similarly, we see the case in Eurozone, UK, and even, Japanese inflation pressures are also rising. That is why, Japan has been ultra loose in terms of monetary policy. They have had because they've been, in deflation for decades. So now, since they are coming into inflation, their governor has also recently kind of signaled that probably they could shift an end to it, the ultra loose monetary policy. But that's just a hint that is provided, and only time will tell whether they change, whether they switch to, tighter monetary policy or not. This is CPI, which is, widely used. Okay, there are other measures of inflation, which is WPI, wholesale price inflation, like we have in India, and then there is PPI, which is producer price inflation, which I said has to do with producers, what they buy, what they sell. Everything related to that is, considered in PPI, and it is like restricted to the domestic firms. It does not take into account any imports. Okay, so it is restricted to domestic producers, inflations or change in prices. Now, as I said earlier, also that, CPI is very well known, but the Fed relies on something called as core PCE for their policy guidance, which is core personal consumption expenditures price index. Right now, US core PCE stands at around, the last figure that came in July is 4.2%, which is, of course, if they are considering as an inflation gauge, their target is 2%. It is standing at 4.2%. This is also a major reason why, there are hopes that, no, not hopes, but bets in the market that, the Federal Reserve will probably hold on to higher rates for longer, or would delay the rate cuts. And in fact, there are, there are odds that, the Fed could probably go ahead with a rate hike, another rate hike, which could be the penultimate, the last one for this year. So, 25 bips rate hike could be expected in November or December. But yeah, we are not, it depends completely on the data. And that is why we have seen that dollar index has seen a lot of data related volatility. Now, Why is core PCE more preferred? Basically, core PCE is the data which is acquired through business surveys, which is which the Fed considers to be more reliable than the consumer surveys, which is used by the CPI. And then for sources also, the CPI, it is given by the BLS, which is the Bureau of Labor Statistics, and the PCE comes from the Bureau of Economic Analysis, which are two different sources. So of course the figures are going to be a little different. Plus the timing of release is also different. The CPI usually comes 15 days after the month ends, whereas core PCE, which is a more detailed figure, it comes a month after. Basically for July, it will be released in August end. So that is the kind of difference that both of these gauges have. Now let's move on to labor market metrics. So, when we talk about labor market metrics, the most common gauge that comes to our mind is unemployment rate. Now, what is unemployment rate? As the name suggests, it is the percentage of unemployed against the total, um, employed and unemployed population. So, the basic definition of unemployed is a person who is jobless but is actually, applying for jobs. He is, through various methods. But is there, I mean, because this is very important to understand, because if a person is actually not looking for a job, he won't be considered a part of the unemployed. Only if he's actively looking for a job will he be considered a part of unemployed population. And basis that the unemployment rate is decided. Okay, the another indicators that are usually used in the US are, or specifically used in the US, is non-farm payrolls. So basically, it is change in the number of job additions. As the name suggests, non-farm payrolls, it excludes the farming industry. Okay, but it gives you an idea overall, addition in number of people added in a given month. It comes on the first Friday of every month, and it is one of the most important labor market indicator, and one of the most important indicators used by the Fed as well for their policy decisions. Next, we have jobless claims. So this is, why I explained unemployed definition is because in the US, if you are filing for unemployment insurance, only then will you be counted as unemployed, in that population. So, this number is released weekly. So the number of people filing for unemployment insurance in a given week is jobless claims. So increase in jobless claims indicates increase in unemployment in the US. And this comes every Thursday. Then we have average hourly earnings. So this is a leading indicator of wage inflation. It tells you whether the wage inflation is rising or falling. This also comes on the first Friday of the month, after the previous month ends. And ADP non-farm employment change. Okay, so the non-farm payrolls, the first one, like we said here, it is a government related it's an official figure released by the government, whereas ADP non-farm employment change, it's released by this private a private company called ADP, which actually calculates the change in private payrolls. So there could be significant difference between the two figures. So it cannot necessarily be considered as a precursor of non-farm payrolls, but yes, it definitely gives an idea about the change in the private sector. So yeah, so that is about ADP non-farm employment change. Now, as you can see in the graph here, you can see that the non-farm payrolls have been falling. Okay, in fact, in the last 6 months, we have seen that the average has been, around 215K, which is way less compared to above 3 lakh. In the prior 6 months. And so there have been signs of moderation in job additions. Okay, then at times it might so happen that even if non-farm payrolls have come on a come probably higher than expected, still you won't see that kind of positivity in the dollar index, and that could be because this figure, average hourly earnings, this could have shown some kind of moderation or easing. So if it is like it has come 0.4% in the previous month, and the latest figure shows it is 0.2%. Then markets are divided as to, because the wage inflation is coming down, non-farm payrolls are going up. So there is it is kind of a mixed data, which is why you won't see any significant impact in the dollar index. So yeah, that is the reason why at times you don't see you know a reaction in proportion to the increase in the NFP. So these are the on the right hand side. I have just put the unemployment rates that are I mean in the last 3 months. So the latest figures are only available for US and China. Other figures will be coming in the next week. So the unemployment rate has been like kind of wavering. So the job market, it's uh, there's no clarity on how it is going to fare in the coming months. But one thing is for sure, that it has surely started to moderate, surely started to show, at least started to show signs of easing. Then we move on to PMI, the Purchasing Managers Index. Whenever we talk about PMI, there are two types of PMI: manufacturing and services. So in manufacturing, as you can see, it is there are five components: new orders, five main components rather: new orders, inventory levels, production, supplier deliveries, and employment. And in services PMI, we have business activity, new business, new export business, prices changed, and uh, outstanding business. So, basically all these components, basis this, we get a figure for the month, which could be above 50 or below 50. Now, what is the importance of 50 figure in PMI is, if the PMI figure is above 50, it indicates an expansion in the manufacturing or services activity. But if it is below 50, it indicates a contraction or a weakening, activity. Now, as you can see in the figures that I've put in the table on the right side, it's the manufacturing in most of the economies, except for India, in fact, have been, the recent figures have shown a contraction. And in the services side, you will usually see that the figures are either near 50, or they are above 50, which shows expansion. But the reality is that in the past few months, what we have seen is that there has been slight improvement in manufacturing PMIs, because they had like contracted sharply, like below 50. So some had reached like 43, below 43. But now they are trying to kind of, come above like 46, 47, 49, somewhere around that. While on the other hand, what we are seeing is that services activity have started to show an easing. Okay, so earlier figures were at around 54, 55, and now they have come down to 51. And in case of in fact if you see for EU and UK, the figures were in expansion, I think some 2 3 months back, and now they are in contraction. So you can see the services, which is the dominant contributor to the GDP, is now starting to ease, which is definitely not a positive sign for the global economy. Moving on to the next slide. Now, this is a very basic table which tells like what is the impact if the data comes positive or negative. So, like I'll just tell you how to read it. If the GDP is positive, it comes on a higher side, it's positive for markets. If it comes on a lower side, it is negative for the markets. Similarly, for CPI in normal conditions, inflation is considered a stable inflation situation is considered a positive sign for an economy, because it indicates an active consumer spending. So that is why a higher consumer spending relatively is considered as a positive sign, and it has a positive impact on markets. Similarly, PMI also, if the figures are higher, above 50 specifically, it is considered a positive sign for an economy. And non-farm payrolls, since they are kind of the number of additions, job additions, it is of increase in that is considered as a sign of a positive, employment situation, of a positive labor market. Whereas on the other side, we have fiscal deficit and unemployment rate. Of course, if the fiscal deficit rises, it is negative for the economy. So that is what I've shown here. And if the unemployment rate, if it is high, even that is a negative, a sign for an economy. So that is, the simply what the table is trying to say here. Now, we have discussed all the the indicators that we've discussed so far have all been very high impact indicators. There's certain other indicators also which have an impact on, markets, which have an impact on commodities, currencies across risky assets. So that I've listed here, which is housing data, consumer confidence, retail sales, unemployment change, industrial production, consumer spending, and trade balance. So these are kind of medium impact data, which may or may not have like kind of a very significant impact on the markets. But yes, especially retail sales, if it like shows a very significant increase, it could be very positive or negative depending on the situation for the markets. So yeah, these indicators also are something in addition to the previous four that we have mentioned: GDP, labor, PMI, and I think just one second, inflation. Okay, so apart from these, these medium impact indicators are also something that you need to be watchful of, and that at least you should know. I mean, you should take a look at the trend that is seen in these indicators. So these also are worth a watch. Next, this I have just tried to kind of plot dollar against copper and gold. Okay, and we have seen that the bigger candles, like you can see the one here. Okay, this is when the US NFP slipped for the first time, indicating a moderation in labor markets, because it had slipped from near 3 lakh payroll additions to directly 209, which was considered that finally labor market is starting to ease and it's not that tight now. And so the immediate reaction of market was that it had a negative impact on dollar, because this indicated that probably now Fed will go easy on rates and might consider a pause or a complete stop to rate hikes. That is why we have seen that dollar had a steep fall here. Again, if you see here, we had CPI data coming in, where CPI had slowed down to 3% in June. Okay, so because of which again, it is all of this are kind of important for the Fed's policy decisions, and that is why they have such a significant impact on dollar index. Like you can see here also, since CPI slowed down, again, markets were kind of anticipating that the Fed will go kind of easy on monetary policy, and that is why we saw a sharp drop in dollar to below 100 levels, in fact. So this is the reason why where we had seen such a steep drop in dollar index. Now here we have seen that dollar index rose sharply. Now this was because the US GDP had come at a very surprisingly positive, and at the same time we had hints from the ECB, European Central Bank, that probably they could go a little easy on rates, given their deteriorating, I mean, because their economic condition was kind of worsening. So that is the reason why we saw that that benefited dollar as well. So yeah, this because here you can see the impact of data very clearly. So this has happened specifically post the data releases. So this is the kind of impact that some data has. So we have to be very mindful of these kind of data releases. So to watch all these data, there are certain websites where you can read about them, where you can know about the current trends. In fact, so these are like freely available websites which you can just watch and see for trends. And in fact, there are data which goes down to like 10 years, 20 years. So you can always use these websites for the historical trends as well, and for news as well. So these are all freely available websites, and are I mean, very you can just for Reuters, you just need to make in a temporary login ID and password, and you can freely access the data and news specifically. So very reliable sources, so you can use these sources for data, economic indicators overall. Okay, so that's all from my side. Thank you so much for joining in, and if any queries, you can please go ahead and ask. Okay. Um, Interesting. Please type in any queries if you have any. Okay, there's this query which is like most of the analysis was on U.S. economy. What about impact on Indian markets? See, honestly, all the data that we have discussed today, the impact will remain the same. Like I have in the PPT itself, I had shown you in the impact PPT, wherein I had shown I mean, if the data is high, how does it impact the local currency or the local markets? So the impact will definitely remain the same. So overall, अगर आप डेटा यूएस का हो या इंडिया का हो, पीएमआई इफ इट इज शोइंग एक्सपेंशन, अगर वो 50 के अबव आ रहा है तो दैट इज पॉजिटिव फॉर इंडियन इकोनॉमी ऑल्सो. सिमिलरली हमारा इन्फ्लेशन, अगर हमारा इन्फ्लेशन हाई है, ठीक है, तो उसकी वजह से जो आरबीआई मॉनेटरी पॉलिसी पे इम्पैक्ट आएगा, अकॉर्डिंगली हमको वही इम्पैक्ट रुपी पे देखने को मिलता है. तो it is, the impact is similar. It is just that I focus more on US economic data because US में कुछ ऐसे economic indicators है जो specifically US के लिए है, जैसे नॉन फार्म पेरोल्स हमने डिस्कस किया, जॉबलेस क्लेम्स, ये सिर्फ यूएस में होते हैं एंड वो बहुत ज़्यादा इंपॉर्टेंट है. मतलब वो इट इज़ सिग्निफिकेंट फॉर द मार्केट मूव्स. सो ओवरऑल अगर अगर आप डेटा की बात करें तो द इम्पैक्ट वुड रिमेन द सेम फॉर ऑल द डेटा दैट वी हैव डिस्कस टुडे, बी इट इंडियन मार्केट्स और द यूएस मार्केट्स. Okay, so there is this question which is like, is it good to trade on high data days? Uh, Honestly, it is very, as a fundamental analyst, I think it's very risky to trade on high data days because specifically, we mentioned about the labor market indicators, which comes on the first Friday of every month. The indicators, at times we have seen that the difference between the private payrolls and the NFP figures have been like very high and very unexpected, which is why it makes the markets very volatile. In case if data comes in line with expectations, okay, if NFP market continues to moderate, okay, then we might see easing in dollar and we may see a rally in commodities. But if it does not happen and NFP figures rise unexpectedly, then the vice versa is very much possible, and we could see a reverse move. And predicting any of these data releases, it is like kind of impossible. You can I mean, I would rather say that you should actually wait for the data and then take trading decisions after the data is released, because that will, for that temporary, the immediate reaction of the markets would kind of, I think, is I mean, as soon as the data comes in, the immediate reaction, and if you see the reaction after 1 or 2 hours, it is very much different at times. As soon as the data, labor data comes in, you will see that there's spike in dollar index. But when people start reading through the data and see that, the data has actually come up on a mixed note, that rally, kind of it calms down. Okay, so it is always, I think it is better to wait once the data comes in, assess the data, and then go ahead with your trades. That will be more, I think, advisable rather than trading before the data. It is a little risky. Okay, so एक सवाल ऐसा है कि एलएमई वेयरहाउस डेटा जो आता है, क्या प्राइजेस पे उसका सिग्निफिकेंट इम्पैक्ट होता है? क्या वो बहुत ज़्यादा प्राइजेस को इम्पैक्ट करते हैं? डेफिनेटली करते हैं, बट द थिंग इज इट इज़ नॉट कि आप एक दिन का डेटा आपको ट्रैक करो, आपको ट्रैक करना पड़ेगा ओवरऑल डेटा, आपको देखना पड़ेगा हिस्टोरिकली ट्रेंड्स कैसे रहे हैं, आपको ये देखना पड़ेगा कि अभी जो लेवल्स चल रहे हैं क्या वो पिछले साल के मुकाबले इज इट लाइक हायर और लोअर, बिकॉज अभी रिसेंटली हमने काफ़ी सारे आई मीन अगर मैं एल्यूमिनियम की जैसे बात करूँ तो हम लोग ने देखा है कि बहुत सारा इन्वेंट्रीज में ऊपर नीचे काफ़ी हुआ है, बट अगर आप देखेंगे तो 5 लाख टन के ऊपर ही रहा है, जबकि पिछले साल वो काफ़ी नीचे गया था। तो उसके वजह से उसको बहुत ज़्यादा सपोर्ट नहीं मिल रहा है प्राइजेस को, इवन इफ इन्वेंट्रीज हैव रिमेन स्टेबल। सो आई थिंक वेन एवर यू आर ट्रैकिंग इन्वेंट्रीज, कभी भी आप इन्वेंट्रीज को देखें तो आप एक हिस्टोरिकल उसका ट्रेंड देखें, उसका डेटा देखें, एंड उसके बाद ऑफकोर्स इट इज़ a very important factor which impacts prices, but I think it is important to track the trend historically, and that will help you assess prices better. Hi, please go ahead if you have any more queries. Okay. Okay, so there's a query which is like, is it better to trade in the morning or evening or or evening shift of market hours? Now, as I said, it depends. If there is any major data that is upcoming, then it is advisable to wait for that data. But yeah, otherwise, if we've since Chinese market start in the morning, if you have had like positive data releases from China, like we recently had, then one can probably have a little positive bias and go for trade. But yes, I mean there's no specific timing as to when you can actually trade. It is just that कि एकदम बहुत ज़्यादा significant economic indicators है तो उसके पहले it is not advisable to trade. Can you please describe the main economic indicators? I think I have focused on that in the presentation itself. GDP, labor, inflation, and PMI. These are the four most important indicators to track, okay, and which have the most, impact on the markets and risky assets. So ये चार इंडिकेटर्स को ही अगर आप अच्छे से फॉलो करेंगे तो एक आपको अगर ट्रेंड समझ में आता है तो देन डेफिनेटली इट विल हेल्प यू इन टेकिंग बेटर ट्रेडिंग डिसीजंस. Uh, okay, since someone had joined late, सर ये प्रेजेंटेशन आपको हमारे यूट्यूब चैनल पे भी मिल जाएगा बाद में पूरा प्रेजेंटेशन. सो वहाँ से आपको एटलीस्ट उसका ब्रीफ ओवरऑल एक आइडिया आ जाएगा. बट जो हम लोगों ने आज डिस्कस किया है वही जो मैंने आपको चार इंडिकेटर्स बताए, वही हमने डिस्कस किया है. जीडीपी, लेबर इंडिकेटर्स, पीएमआई एंड इन्फ्लेशन. सो ये चार इंडिकेटर्स अगर आप ट्रैक करेंगे तो डेफिनेटली वो आपको एक हेल्प ज़रूर करेगा बेटर डिसीजंस लेने के लिए. Okay, so there's a query that does the inflation data have any correlation to any sector in particular? It is not very sector related. It is just that, like I said, it is CPI and PPI. As the name suggests, consumer price index inflation. It focuses on changes in prices of the goods, purchased by consumers. Whereas PPI, it takes care of what the producers do in terms of buying and selling. So it is more to do with producers and consumers rather than any specific sector. Okay, so there's this question which is how does crude oil impact Indian economy? So basically, we are in very simple language, we are crude oil importers. So any sharp increase in prices will add to um, uh, the pressure on the government budget. So it may even increase the deficit, fiscal deficit, like we say. So yeah, so if crude oil prices see a significant increase, then since we are importers, we will see that weighing on our overall fiscal balance and skewing it towards a deficit. In fact, how economic indicators will help to predict the market trends. Like I said, not one point or one indicator would help you do that. In order to kind of understand the market trends, you will have to actually see how it has performed historically. Now, like we discussed in the PMI chart, PMI slide, that services PMI is still showing that it is an expansion, whereas most of the manufacturing PMI figures were in contraction, which is below 50. लेकिन अगर आप उसका ट्रेंड देखें तो आप ये देखोगे कि नॉर्मली जो मैन्युफैक्चरिंग पीएमआई है वो थोड़ा-थोड़ा करके इट हैज़ स्टार्टेड टू इम्प्रूव फ्रॉम लोअर लेवल्स, व्हेरेas जो सर्विसेज पीएमआई है इट हैज़ एक्चुअली काइंड ऑफ ईज्ड फ्रॉम हायर लेवल्स. सो एक स्टैंड अलोन डेटा के बेसिस पे हम कुछ भी ट्रेंड ऐसे ट्रैक नहीं कर सकते. अगर हम लोग को ट्रैक करना है तो हमको पूरा उसका एक थोड़ा-सा हिस्टोरिकल एटलीस्ट 6 महीने से 1 साल का डेटा लेके हमको उसको थोड़ा-सा असेस करना पड़ेगा, तब जाके वी विल बी एबल टू अंडरस्टैंड. अभी चाइना का अगर आप टू गिव यू अ स्पेसिफिक एग्जांपल, चाइना में हम लोगों को क्यों इतना कंसर्न्स नज़र आ रहा है, बिकॉज़ चाइना का जो भी डेटा आ रहा है, इट इज़ वेरी फ्लक्चुएटिंग. कभी पॉजिटिव आ रहा है, कभी नेगेटिव आ रहा है, तो पीपल आर नॉट एबल टू मेक आउट वेदर द इकोनॉमी इज़ एक्चुअली रिकवरिंग. वो एक चीज़ बस क्लियर दिख रही है कि अनइवन है रिकवरी. Recovery हो रही है, but there's no clear path to it, which is again a negative thing, because it makes it uncertain to kind of have an outlook on the Chinese economy. तो इसीलिए एक आपको पूरा थोड़ा-सा 6 महीने से 1 साल का एटलीस्ट डेटा देख के देखना चाहिए कि डेटा वेदर इट हैज़ इम्प्रूव्ड और इट हैज़ वर्सेन्ड. Only then will we be able to kind of understand, how it is going to, impact the markets. Market trend predict करना, it's almost honestly impossible कि अगर डेटा ऐसा आया तो ऐसे ही होगा. It is not, you can say, ऐसे कोई 100% कोई हम गारंटी नहीं ले सकते कि अगर डेटा जैसे एक्सपेक्टेड है वही लाइन्स पे आया तो ऐसा इम्पैक्ट होगा, या अगर बहुत ज़्यादा बढ़ के आया तो ऐसे इम्पैक्ट होगा. बिकॉज बहुत सारे डेटा होते हैं जो क्लब्ड होते हैं. जैसे अगर आप क्रूड ऑयल इन्वेंट्रीज का डेटा भी देखते हो, तो अगर सिर्फ आप क्रूड ऑयल इन्वेंट्रीज पे फोकस करेंगे और अगर आप देखोगे कि क्रूड ऑयल इन्वेंट्री बहुत ज़्यादा डिक्लाइन हुआ है, ठीक है, फिर भी हम लोग को प्राइजेस में वो मूवमेंट देखने को नहीं मिला. तो वो इसलिए बिकॉज क्रूड के साथ गैसोलीन और डिस्टिलेट का भी डेटा रिलीज होता है. अगर गैसोलीन और डिस्टिलेट इन्वेंट्रीज इंक्रीज हुई है, क्रूड ऑयल डिक्रीज हुआ है, इट विल हैव अ मिक्स्ड इम्पैक्ट और आपको वो इम्पैक्ट प्राइजेस पे देखने को नहीं मिलेगा. तो इट इज़ नेवर लाइक अ स्टैंड अलोन थिंग दैट यू हैव टू सी व्हेन इट कम्स टू डेटा एंड टू अंडरस्टैंड मार्केट ट्रेंड्स. आपको एक ओवरऑल होलसम पिक्चर देखना पड़ेगा. थोड़ा 6 महीने से 1 साल एटलीस्ट डेटा ट्रैक करना पड़ेगा. अगर कोई डेटा आ रहा है वो किसी के साथ क्लब होके आ रहा है, तो वो 3-4 डेटा को आपको असेस करना पड़ेगा. तो ओवरऑल आपको एक इम्पैक्ट का आइडिया आएगा कि कैसे हो सकता है उसका इम्पैक्ट आगे जाके. ओके, तो किसी का सवाल है कि ये गिरावट जारी रहेगा. ओके, सो बेसिकली मार्केट्स में अभी जो भी थोड़ा बहुत नेगेटिविटी है वो स्पेसिफिकली इस वजह से है क्योंकि एक तो आज एफओएमसी का डिसीजन है. अगर आपने रिसेंट यूएस का डेटा ट्रैक किया होगा तो सारा डेटा पॉजिटिव साइड पे आया है. अगर पॉजिटिव साइड पे आया है तो आप सोचोगे मार्केट्स के लिए नेगेटिव क्यों है. वो इसलिए नेगेटिव है कि वो अगर डेटा पॉजिटिव आ रहा है, इट विल वो फेड को और इंसेंटिव देता है कि वो कंटिन्यू करे हायर इंटरेस्ट रेट्स के साथ. तो उसके वजह से जो आपका रेट कट का एक्सपेक्टेशंस है वो तो पुश बैक हो ही रहा है. साथ ही साथ ये भी हो रहा है कि नवंबर या दिसंबर मीटिंग में वो और एक रेट हाइक करे. उसके बेट्स बढ़ते जा रहे हैं जिसकी वजह से मार्केट में वो अनसर्टेनिटी, क्योंकि फेड ने क्लियरली टाइम एंड अगेन बोला है कि दे आर गोइंग टू बी लुकिंग एट द डेटा रिलीजेस बिफोर मेकिंग एनी पॉलिसी डिसीजंस. और डेटा अगर आप रिसेंट डेटा रिलीजेस देखोगे तो ऑल हैव शोन दैट यूएस इकोनॉमी इज रेसिलिएंट. यूएस इकोनॉमी इतना इंटरेस्ट रेट होने के बावजूद भी 0 से 5.5% आने के बावजूद भी इतना ज़्यादा कंज्यूमर स्पेंडिंग में डिप नहीं आया है. इन्फ्लेशन जितना गिरना चाहिए उतना नहीं गिरा है. एक्टिविटी ओवरऑल जो इकोनॉमिक एक्टिविटी है वो भी सस्टेन्ड है, जिसकी वजह से लोगों को जो रिसेशन के कंसर्न्स भी थे वो भी कम हो गए इनफैक्ट. तो ओवरऑल मतलब उसकी वजह से ही थोड़ा सा अभी फिलहाल मार्केट्स में नेगेटिविटी है. बिकॉज सबको लग रहा है कि फेड आज भी वही बोलेंगे कि interest rates will remain higher for longer considering the positive data releases. They may say it directly or indirectly, that is something that we can't predict, but हाँ ये lines पे उनका comments आ सकता है. Okay, so when we see, okay, so there's this question which is when we see the decoupling effect between economies. Okay, see, honestly, all the economies are kind of moving in different directions. We are seeing that US economy is showing signs of resilience, while on the other hand, we are seeing that economic activity, economic situation in the EU has worsened. Okay, um, similar case for China. Okay, the Chinese economy, people were expecting, sorry, people were expecting recovery since the first quarter of this year, considering that they have eased all the restrictions last December itself, but that has clearly not happened. So overall, right now only we are seeing the decoupling. I mean, if if by that you mean that the currency impact, if you see the dollar is actually moving stronger against all other economies, it is specifically because of the resilience that is shown by the economic data releases relative to the other economies. So we are seeing that right now. Other different economies are kind of moving in different directions, and which is why we are expecting a bit of policy divergence, and we are actually seeing a bit of policy divergence between US and China, between, in fact, now EU. In I think recently they had hinted that probably the rate hike would kind of stop after this. So all of this is kind of decoupling. I think we can say that. Just one second. Okay. Okay, if Chinese economy is weak, will it result in fall in commodity prices globally? Of course, it will, because China is the very significant, or in fact, one of the topmost, or you can say the biggest consumers of commodities. Producing side also, it is a significant producer for a lot of commodities. So, if Chinese economic activity falters, then it is a very big negative for all the commodities. So yes, it is definitely negative for all commodities. Okay. Um, okay. So I I think it's we don't have any more queries related to the economic indicators. So that calls for a close. Thank you so much for listening to this presentation. Thank you.